Welcome to the latest tax snacks from Old Square Tax Chambers. My name is Sarah Squires and I'm a barrister specialising in business and corporate taxes. And today I'm going to be talking about the budget change to corporation tax rates. The current corporation tax rate is 19% and will remain that for the next 2 financial years. But on budget day, the Chancellor announced that going forward from 1st of April 2023, the main rate of corporation tax will be increasing to 25%. Although there are a number of budget rumours indicating that corporation tax would be going up, very few expected the scale of increase, which effectively takes corporation tax back to the levels we last saw in 2011. However, notwithstanding the change in rate, it does seem that most UK companies will continue paying corporation tax at 19% after 2023. And that is because at the same time the government has said it will introduce a new small profits rate. This will apply to companies with profits of up to £50,000 a year. And the Treasury has worked out that this means 70% of the UK's active trading companies will still be at 19% in 2023. Working out if you're eligible for the small companies rate should be relatively straightforward, but one word of warning. That 50,000 limit can be adjusted downwards if the company in question has associated companies, with association being worked out by reference to common control. And the rules here are quite detailed, as you would expect. In addition, there is one class of company excluded from the small profits rate, and that is a company that qualifies as a closely held investment company. And the test for this is very much based on a similar test in the previous version of small profits rate that the UK repealed in 2015. Now, with the small profits rate applying up to £50,000 of profits, there is obviously a risk of a cliff edge if you're earning £50,001 of profit. And to deal with this, the measures include a taper, which basically means that as your profits increase over £50,000, your corporation tax rate will increase gradually until the point you reach £250,000 of profits, at which point the full 25% is chargeable. To work out how the taper applies, you have to apply some complex algebra, but the Office of Budget Responsibility has helpfully done some rough calculations here, and their figures suggest that a company with £100,000 of profits would be paying corporation tax at 22%, whereas a company with 150,000 profits would be paying CT at around 24%. So that hopefully gives you a sense of what the taper will mean in practice. In terms of what the corporation tax rate changes will mean in practice, well, obviously for the 30% of companies not able to benefit from the small profits rate, it's a higher tax bill than that which they've had to date. But it's more interesting for those businesses not yet incorporated that have profits within the range of the taper, where incorporation may involve a bit more head scratching to work out whether it's really worthwhile. Now, in that context, you also have to bear in mind that in 2018, the government reduced the dividends allowance, meaning that the amount of dividends which you can receive tax-free in a given year is now limited to £2,000. The overall impact on tax for businesses, particularly single director business, is something that the Office of Budget Responsibility has also helpfully looked at for us. And if you look at the materials they published on budget day, it includes 2 helpful charts that give an indication of what the budget means for businesses, first with an income of £50,000 as shown in this chart here. On the left hand side they show the changes to the tax of employees, which is where the personal allowances are being frozen. They then show the effect of the budget on self-employed, and finally show the effect on single director businesses as a result of the changed corporation tax and the small profits rate. Of the three purple and green figures, the far right column is the one that shows the significant change in tax payable when the 25% rate comes in. When you get to the income of £150,000, then again you can see from the purple and green columns on the right what the changes are likely to mean in practice in relation to tax payable. And I said before, it does mean that there might need to be a little bit more head scratching rather than an instant move to incorporation. Thank you for listening, and I hope this was helpful.